it feels like inflation is starting to drop. The levels are starting to drop. It feels like the economy. I mean, I know the UK economy is heading for a recession, but it feels like the massive headlines regarding the economy, regarding inflation, it feels like things are starting to calm down a little bit. But I've not been paying attention. What's going on, man?
So, your CPI is coming down a little bit, right? But you have to remember, like, prices are still going up.
Yeah.
Prices are still going up. It's the rate at which they're going up. And that's really important for people to understand that difference. And so the speed at which they're going up is slowing. And but I don't think they're aggressively, I would call that deceleration, right? Like the deceleration's not really all that much. So if we were driving in a car and I jam on the brakes, like that's aggressive deceleration. If I'm just lightly tapping on the brakes and we were going 70 and now we're going 65 and 63 and all of a sudden maybe we're going faster again. I would describe it more in the latter sense than the former.
Is that not natural though? In that there's a lag.
What's concerning is if we're going 150 miles an hour, right, and the speed limit on the road is 40, like, and you're decelerating to 140, you're putting a lot of risk out there as to like really potentially breaking something really bad. And I would describe what we're seeing right now as that.
Right. Okay.
Yeah.
So what do you think they should be doing? Do you think they should be massively hiking rates?
So here's the thing. There's nothing I could tell you that they could be doing better because the situation is so dire, right? Like if you put me in the seat at any one of these central banks, I don't know that I could really do policy different. And this is a huge like foot stomp for me. I love banging up central bankers, like with the best of them, right? But if you're really going to get at the inherent problem, you have to go upstream of that. And when you go upstream of that, it's fiscal appropriators that are the actual problem.
What's a fiscal appropriator?
So like the people that are spending the money. So like you have tax revenues, right? Let's say you bring in $1 trillion. And so like that's what you can work with. And so they might slice up that $1 trillion and say, all right, well, we've got $500 billion that's going to military spending. We have $200 billion that's going to whatever, right? And so they're the ones that are spending. The spending is far exceeding what's coming through the door. In fact, here it's starting to get so bad that just the interest expense alone, like not even into productive things that you're spending, the interest expense alone is starting to come up to numbers that are like the size of the military spending,
right?
Which is insane, right? So when you talk about a central banker, the central banker is the one who's adjusting the money supply to try to work with what's being spent, the fiscal appropriators.
Right.
So they're the ones that are making all these decisions to it'd be like, let me give you a good example. Just like in a typical household, like maybe a husband and wife goes out and they decide to buy all this excess, like way outside of whatever both of their paychecks can support. But if they were able to control the currency, right, they would say, oh yeah, we spent a bunch of money, but let's just add more currency into the system and then we can spend even more. That ability to adjust the currency is the central bankers that are trying to offset the really poor decision-making of living in excess and spending way outside of their means. So
the UK government right now, I can't remember if they've done their budget. I think they've got a mini budget coming, but they've talked about two things. They're going to raise taxes and they're going to be reducing spending. So more austerity.
I've got some comments on that.
Yeah, please do. Tell me.
Well, so think about it.
Yeah.
So Truss came in. She was like, hey, we're
44 days.
Immediately out of the gate, got really, really loose and like, hey, we're going to go out and we're going to do all these other things and we're going to spend again, right?
Yeah.
And as soon as she did that, the guild market, as everybody knows, was like, well, then if you're going to spend that much, we know that's going to turn into debasement, and because of that, all these bond yields need to blow out. The bond market needs to sell off because that's representing that they couldn't pay for it. Like it's just a big math equation, right? So the whole bond market starts blowing up because she's going to go out and spend like crazy. So then they're like, okay, well, and you can see this in the bond yield curve for the gilt market. You can see all of this literally play out right on that chart across all durations. You should see it. I mean, it is like a whipsaw. So everyone was like, they had to come in, they had to do QE, they had to backstop it.
66 billion, was it?
I think that's about. I think you're right. Yeah. So they do QE, they backstop it, and I think the central bank looked over at the fiscal appropriators and are like, all right, crazies, like you're forcing us to do something that we don't want to do. We already got sky high double-digit inflation. Like, what in the world is this policy? You have to reverse course. And they did. They reversed course. And when you look at the bond yield curve, you'll see it aggressively get bid, right? But here's the thing, Pete. So like they're saying that they're going to be more fiscally appropriate, but they're not going to be. It's just a narrative. It's a story. And if I was going to like describe to you what I think they're doing is think of it like a race where you have like 10 people doing a 100-meter sprint down the track. And one of those people is running the slowest. And there's like this monster that's coming after them, right? And so they're just like, if we just say we're not going so slow and like we get up there, like we'll get faster in the race, which is what they're doing, that they're catching up so that they're not going to get gobbled up by the monster, right? But there's no intention for them to actually complete this race. Like they're all going to get gobbled up by the monster. Like it's just a story. They're not actually going to be more fiscally appropriate. They've just got to look like they're not going to get gobbled up for long enough so that they can all collectively debase together once again to just like keep the scheme going that like seems to never end.
Who's the first mover in that?
But they will. What's that? Who's the
first mover, do you think?
When you say first mover,
like who's going to be the first one to break and start debasing again?
I don't know, but that's the big question, right? It's like, so they've duped everybody thinking that they're going to be like fiscally appropriate now, right?
Yeah.
And they kind of, because it's all talk, they don't have to realize any of that because the math on this is all in this big giant model of the next 10 years that is then going back into the debt markets to be repriced. And so as they talk and they're saying we're going to be more appropriate, we're not going to spend at will, the models then change. And when you're this far down the rabbit hole of lies, like these models are like the curve in these models is just tremendous, right? For one little thing that they say that they're going to change. So they say that you get into this situation where who can lie the best?
Sam Bankman-Fried
is really Sam Bankman-Fried. And and who are they up against? I think that'd be the next one. So they're up against Japan, they're up against the US, and it's the EU and the UK are really kind of it's not 10, it's really kind of 4 of them just trying to convince the world that their treasury market is not insolvent. And so the UK was the one that was about to be gobbled up in the lie. And so who's next? Maybe the US, maybe Japan. I don't know. Now you got a little bit of a relief rally this week with the deceleration of inflation.
Yeah.
But I mean, what happens when the next print when it's the exact same number?
What is the prediction though?
I have no idea.
I think it's too early to have the prediction for next month.
Yeah.
What is it? 7.7?
Yeah.
Right. The UK is still over 10.
Oh, is it still over 10? I don't know.
Yeah.
One of the things that I think is a really important idea that's almost never discussed is when you look at the last 40 years and you look at how interest rates have come down, everybody's familiar with the charts, right? That show how all these interest rates on all these net consuming nations nation states have been going down like that. One of the things that I think is lost is as central banks step in and they continue to do these business cycles and they reflate, and especially as of recently through QE and those types of activities, what's lost is you have the consolidation of enterprise. And you have the larger companies step in and they gobble up the smaller companies. And the way I would describe this is you lack biodiversity of business. So think if you walked into a forest and you would see all sorts of different species of plants, animals, that's a healthy forest. It can withstand any type of disruption that would happen in that forest could fix itself and heal itself because you have so much biodiversity in the forest. When you think of business and you think of competition in a naturally free and open market with a sound money inside of it, you have a lot of biodiversity inside of the economy. But through manipulation, you're actually removing that biodiversity of commerce between businesses. And when you do that, what happens at the end of that, like as you do this for 40 years from basically the 81 down, when you look at business today, just look around. It's like you go into a food store, right? It looks like there's millions of different products, but you could probably trace every one of those products back to about 10 companies.
Mm-hmm.
Yeah. Nestle and Coca-Cola and
it's probably all corn syrup and that's a whole nother topic.
Well, I've actually noticed a big change in the supermarkets in the UK over the last 2 years. I wonder if we've got Emma with us here. I wonder if she's noticed the same. In that, less and less of the space in the supermarket is now dedicated to food products. Mm-hmm. And more of it is being dedicated to other things you might need in the home. So historically, you go and get your food and maybe your toilet rolls and your toiletries and a few things. But now there's like the main shelves in the supermarket I go to, it's a Sainsbury's. It's like a huge building and it was 2 massive rows of shelves, right? One side was kind of like all food and bread and vegetables, and the other side, at the very end, there was like frozen stuff. Now it's like, I've noticed when you go around, there's just less and less ranges of products, but more and more almost like, they're becoming like department stores.
Yeah.
and it's kind of like the Kmart model, right?
Yeah,
And
have you noticed that?
But it's just an example of many, no matter where you look, like we're talking about food and how it's becoming consolidated, and you're not having a diversity of businesses that own the product lines. And this is happening everywhere. Literally anywhere you look, throughout anywhere in the economy, you're going to find this consolidation of enterprise. Now, why is that important? Okay. It's important because as you look at supply chains breaking down, okay, let's say that I'm building a complex part, or let's just say I'm building like a really complex robot for whatever business. And this is a $10 million robot that I'm building, right? And then I'm going to build them at scale. When you look at all the pieces and parts that go into that, I have to tap into a supply chain. Maybe I have a sub that builds part A, and then I have another sub that builds part B, and then that sub has 10 different companies underneath of it for its supplies. And there's subcomponents that are built before this robot comes, or it'd be like an iPhone or whatever. And I think an iPhone's a bad example because Apple's such a powerful company. But go and look at the car industry or wherever, right? Like find a complex end item that's being constructed. And then you go down that supply chain and you look at their ability to access pieces and parts. And if we went back 40 years, they might be able to reach out to 20 different vendors. And then 20 years ago, they might have been able to reach out to 10 different vendors. Now they might be able to reach out to 3 different vendors for one tiny component of this thing that we're building, okay? Now let's say it's down to 3 that you can access. And now one of those companies goes bankrupt that you used to get the parts from, and now there's only 2 left. What is that doing to the price? What is it doing to the reliability of receiving the part. What is it doing? So when we talk about the supply chains are jacked, a lot of people, I think, want to just look at it and be like, oh yeah, COVID and supply chains are bad. But what they're failing to see is there's been a systemic decay of supply chain destruction that's been happening for 40 years.
Why?
Because of policies that are being made. So like if you would go into a forest and you would say, why does this forest not have a lot of biodiversity in it? My answer, without even knowing, would just be there has to be some type of intervention that's happening in the forest. Some human has to be going in there, or some animal that's extremely or whatever, right? There has to be manipulation in there that's causing, it's not free and open and naturally occurring. And so when we look at our global economy and the coordination that's happening amongst all of these central banks, they're destroying the biodiversity of business itself, which is destroying the supply chains, which is causing the prices to go higher and just-in-time supply chains to break down. And that's driving the costs to go up, which is exploding your bond market because it's priced for near perfection at 0% interest rates, because they were used to literally these models that got parts and pieces there always right on time. And so you're seeing the unraveling of that, and the debt markets aren't priced for it. The equity markets aren't priced for it. The commodity markets aren't priced for it. And so you're having a realization of that. And that trend is and it comes to this really simple thing, supply and demand, right? So the Fed is trying to suck demand out of the economy through this model that has caused all these issues in these biodiversity competition issues in society that's breaking the supply chains. But when you look at prices, as they're trying to destroy demand, the thing that people aren't talking about is, are they destroying supply faster? And if they are, prices aren't coming down. They might actually keep going up, okay? Because it's just a simple supply and demand calculation. So everybody's talking about, oh, the Fed's gonna do demand destruction. That's gonna cause this to correct itself, then we're gonna do QE again and all this. But what they're failing to discuss is the reality of real economic activities. They don't see it because they've worked in finance their whole life. They're not building products. They're not actually project managers delivering real quality things that society actually demands. And that's the thing that frustrates me, because people don't talk about it at all.